Hi everyone, I'm Karunya Rao, and on Ideas for Profit today we help you understand what's the story brewing in the HFC space. Now we all know the stock of PNB Housing Finance has doubled in 6 days following the announcement of capital infusion worth 4,000 crores. The company's board has approved preferential issue of equity shares and warrants to private equity firm Carlyle along with other investors. What really boosted the market sentiment was the news of Aditya Puri, former CEO of HDFC Bank, who is set to join the lenders board. It's being viewed very positively by the street, as we all have seen reflect in the stock price as well. While the large fund infusion well equips the lender to tap growth opportunities in the segment, the stellar rise in stock price has pushed up the valuation to a level which is now pricing in many positives. Following the rally, PNB Housing is now trading at 1.6 times of FY23 estimated book value. This is post the infusion. Investors need to be cautious as any potential upside in PNB Housing Finance looks limited following the fierce rally we saw recently. They should rather scout for other opportunities in the housing finance sector, as some of the low-valued quality stocks could catch up in terms of valuation. Momentum is not the only reason to consider HFC stocks. Among different asset classes catered to by NBFCs, home loans have the least credit cost. Hence, HFCs with a balanced product mix are expected to fare better in terms of asset quality amid the uncertainties posed by the second wave of the pandemic. The overall asset quality for most HFCs has held up well so far. The moratorium and Supreme Court stay masked the reported numbers of Stage 3 assets or GNPA ratio. Moreover, restructuring of loans under RBI's resolution plan was limited. Provision coverage has been healthy as most HFCs have created additional provisions. That said, provisioning buffer of LIC Housing is a concern area because its provisions on standard assets is almost zero. In comparison to that, HDFC has provided for about 1.4% for stage 1 and 2 assets. The asset quality of HFCs essentially depend on its asset and customer mix. So while the overall asset quality looks manageable, pressure is seen in some pockets of housing credit. Any tightening in liquidity or slower economic growth could impact the asset quality, especially in segments like construction finance and loan against portfolio, also called LAP. Cash flows in self-employed segment are highly vulnerable to adverse economic cycles and add to asset quality risks. Valuations of HFCs present a stark picture of divergence. For instance, consider the case of LIC Housing, which is the second largest HFC. It is now trading at a significant discount to PNB Housing. While LIC will have to raise capital to maintain adequate cushion over the regulatory minimum requirements, it still does have a better product mix and asset quality compared to PNB Housing. Despite a moderate capital position, the fact that LIC Housing has so far not resorted to raising equity capital at below book value is actually positive. Look at the recent transaction, or rather capital infusion in PNB Housing at 390 per share, which was much below its FY21 book value of 530 rupees, thereby causing significant equity dilution for minority shareholders. Within the sector, if you look at affordable housing finance, it has seen strong growth, which is well reflected in the premium valuation of pure play affordable players. Aavas Financiers has created huge wealth since listing at the peak of liquidity crisis in September 2019. The recently listed Home First Finance has also seen good traction in stock price over the last few days. PNB Housing stock has seen a bit of a roller coaster ride. Before the spectacular rise in the last 1 year, PNB Housing suffered a brutal collapse from the peak price of 1647 in 2017 to 156 rupees in 2020. Repco Home Finance is another stock which saw huge price swings in similar patterns in the recent past. Repco went through a rough period marked by the lack of growth in the housing market of Tamil Nadu and rising delinquencies in non-salaried segment past few years. Consequently, the stock derated with forward 1 year price to book multiple contracting from a peak of 4x in FY17 to below 1.5x in FY19. Now it's trading at about 0.8 times FY23 estimated book. While PNB Housing has bounced back owing to capital infusion, the key thing to watch for Repco would be growth and its asset quality, especially after the second wave. The stock can outperform in near term if asset quality is maintained. Overall, we are positive on the housing finance segment given the fundamentals and see PNB Housing's event as a key trigger for re-rating of the entire sector. Risk reward is extremely favorable for LIC Housing and Repco, and valuation of both these stocks could catch up to PNB Housing's valuation over the near term.